video. Let's look at this week and how it's been going. I hope you had a good New Year celebration, Christmas and whatnot. My name is Joachim Geria. This is Clear Trades. I'll be breaking down this week and also what I have learned about trading, which I believe will help you to become a profitable trader. I believe it is a very important shift of focus and attention that I can show you today that will greatly enhance whatever you're doing as a trader. Now, obviously, I'm just sharing my personal experience, and I can share how I was before I implemented the changes and how I'm after I've implemented these changes. You may or may not agree with them. You may or may not be benefiting from it. That is ultimately for you to find out. But anyways, let's look at what happened this week. You can see I'm up at 26% on the account, nothing too exciting. As you can see, it's been dragging on for a long time that I've just been basically going up and down, around break even, with a little bit of an uptick towards the end. You can see this week I made 3.41% on the account, $205 profit, and 661 pips in difference at a 60% win ratio, which is actually pretty high for me. When you look at some previous videos, I don't think I had such a high win rate. It says I made 20 trades. That is not really accurate because I sometimes scale in, scale out, so it counts it probably like that. I looked at 8 opportunities this week. That's it. I didn't take more than that, but we will look at that more. Anyways, the rest is not really that interesting. This is a live account. As you can see, live update, trading privileges, track record, real USD, VT markets, whatever. So this is a linked account. So you know, I'm not just talking out of my ass. I actually know what I'm talking about, and I'm not trading on demo account, which is nothing wrong trading on demo account, but I would have to disclose that. Anyways, if you're interested in what I am usually up to throughout the week, where I share sometimes some of my setups and how they've played out, or when I'm sharing some of my watch lists and what I'm looking at, then head over into the Telegram channel. The link is in the description below or the comment section. And I want to upgrade what I'm doing here, as I've been somewhat distracted with my trading, and especially getting the new trading in gear from, which is more Stacy Burke style, and learning a lot about it, having to do a lot of research. But I seem to have hit a pivot point where I'm at least around break even, potentially looking towards profitability, but we will see how that goes over the next few weeks. I'm always careful with these kind of statements. So I've decided, and this is one of the changes I'm making, that I'm a little bit more process oriented going forward in this new year. It's not something I've decided consciously in terms of, oh, it's a new year, let's be like refocus. It's just something that has evolved as something that is necessary. So what I do now is each week I do a meta-analysis of my trades. I take screenshots of my trades, I save them. Sometimes I also post them into the Telegram group. And then at the end of the week, I go through them, and I sometimes go back into my trading view. I take screenshots from the replay mode if necessary, if I've not fully documented what I wanted to look at. And I document it in here so that I have a better picture and a better understanding of what I have done, what has worked, what hasn't worked, what needs improvement, what I can build on for the next week. I believe this is necessary because trading is a process, and you need to look at the trading. And actually, let me just go through that real quick before we go through the trades, because I believe this is part of what is making a difference for me in my trading at the moment, or it's one of the biggest ones. And so what is it? You need to look at what are the steps that you're taking. It's a process. So a process starts with A, it goes to B, it goes to C. Sometimes it starts at A, it goes to C, whatever. There might be different variations of the process, but you have a process. You have a process of how you're finding trades. You have a process of how you're preparing for your trades. You have a process of how you are looking at the trade as it is unfolding, or as the chart is unfolding. You have a process of entering a trade. You have a process of managing the trade and evaluating the trade. You have a process of getting out of a trade, and you may have a lot of practice and it's all unconscious. You still have some kind of process, and I believe it is worthwhile to make that process conscious. And so what I'm doing, and I'll just do a quick run through for you so that I can explain it. And I recommend to not necessarily take what I'm saying as a template, though you can do that if it's fitting for you, but rather to ask yourself, what is my process for trading? How do I go about this whole thing called trading? What are my first steps? Why do I take them? Does it make sense to take that as a first step, or should I change up the order? It is important to have this kind of clarity and to improve the process, because as you're improving the process, it most likely will help with your profitability. Okay, so let's look at the market. I decided it's probably best if I just look at the 1 hour chart to start out. There's a lot of assets I want to scan because I'm not just trading Forex, I'm also looking at crypto, mainly BTC and ETH. I have not been looking at ETH. I look at gold, I look at silver, I look at the indices, NASDAQ and the Dow, the DAX as well, plus currency pairs. So there's a lot of stuff to get through. And so if that is my process, meaning I'm not just trading 4 instruments or 5 instruments, I am having a lot of instruments as an overall, and I need to find the best opportunity, I cannot spend a lot of time every day coming to this screen and just marking stuff out. Okay, so I'm going to mark out this peak formation low here. Oh, it had a channel here, so I'm going to draw this and then go through the entire thing. It is going to be too slow, too time consuming, and I might be at the end drained. So again, so this is a process. Before I would get to the chart, I would look at the chart, I start drawing out stuff, and I'll go through each one. I don't do this anymore. That's a process refinement I've decided to do. What I do is I go to the 1 hour chart, I look at the chart, and I say, is this looking interesting to me? So I can look at the week, especially as the week progresses, looking at how are things relating to Monday, because this is the opening range, which has in some systems an significance. And in my system that I'm using at the moment, the opening range is significant, and you want to see how the following days are unfolding in relation to the opening range. So there's one filter that I look at. You can also just scroll out. I usually get rid of the lines and everything, so I have a cleaner look at it, because I hate when it's just interrupted. I don't like it. So I can look at it and look at it in the big picture and be like, is this a trade? Is there a trade here? This is going to take me a few seconds. It's not going to take me very long. I can just simply look at it and be like, no, there's no trade here for me. So I'm going to just go to the next chart and look at the chart and be like, is there something standing out here? Is this something that there's a trade for me here? I can see 1, 2, 3 pushes down. Maybe there's a trade. Maybe it's something I want to look at closer. So I just take it. I go and I add this to a new list. You can add it to the watches, and something I still actually need to refine. I should have something where I am dumping everything for the day where I want to have a closer look at, and then put it into the watch list. So you need to make sure that you have a clear process in how are you doing it and the list that you have. But then you can just scan the market. You can go through and be like, oh, okay, so I'm looking at it, 1, 2, 3 pushes down. Maybe there's a trade for me here, especially if it's on the larger time frame. They're evenly spaced out. Maybe I want to have a closer look at it, so I'm just going to put it into that folder. Then I just head over to the next one, and I just keep going. In each one, I don't spend a lot of time looking at it. If I'm unsure, I just skip it. If there's not much on the list, I might come back to it later and look at it again. So, for example, here, you have I took this trade, actually, I shared it in Telegram. You have a somewhat of a pump up, you have a consolidation, you have a shoulder, head, right shoulder potentially here. You have a break down from this range here. You have a first red day, and this is, by the way, me, of course, spelling it out. So which is a lot slower than me just looking at it. I'm looking at it, I'm like, hey, especially when I'm taking this little slip here, I'm like, hey, look, we have a pump up here, going all the way up here. There's the 50% retracement, which is where it becomes interesting. Maybe have 50% retracement, go back up. Depends on the larger context. But just looking at this one, I'm like, hey, the first red day here, it opened here, it closed below it. So this is the first red day. After a pump, it's above the 50% retracement. So there's space for it to fall. This is something I'm interested in, so I'll put it on my watch list. And I just keep going through each one of them and looking at them, looking at the various filters. Oh, I have multiple days of breakout in here. Maybe it's something to look at a bit closer, etc., etc. You just keep going with it, looking at things, how things are unfolding and what stands out for you. That is one part of the process, is the pre-market scan that I do every day. And then you go in and you actually look at the closer time frame. So I go down to the 15-minute, and I become a lot more interested in the details and how things have unfolded over the last few days, how it has unfolded over the last day. What are interesting levels for me to watch? Previous days, highs and low, which are naturally done for me with the indicator I'm using. I don't have to draw them out. You can also just draw them out. This line here is the previous day's low. This line here is the previous day's high. This is the previous low, etc. It just automatically does it. It makes it easier for me and faster to scan it and to see those levels that might be interesting. And then near market structure levels, you know, the previous day high up here might be an interesting level. This is the high of the week of the previous week, since we're heading into the next week now. This is the low of the previous week. So not this week here, but the week before, right? And so there's levels that I'm interested in. I mark them out for a trade if they're relevant. Now, in a case like this has already moved, had to pump up, and it has somewhat of a slow crawl down with a blow off at the end. So this is not something I would be trading, but if I were, I would just make sure I also mark out the previous levels. So maybe there's a consolidation. I want to mark the high and the low. I also want to look at the Asian session, look at the high and the low. This is just a very rough breakdown of the process that I'm using to give you an idea how I work. And then when the day comes, or when the trade comes, I might switch to the 15-minute or the 5-minute. And if it's going to be about the entry, I'm going to switch to the 1-minute chart and see how it evolves. But then you also need to prioritize. So that's another step in my process. I need to prioritize which one is the most likely for me to occur, which one is the highest profitable potential, which may come maybe in the US session later. So I actually sorted, I tracked them around to have a watch list with the highest priority ones that I think is going to happen in the next hour or whatever it is. And I will take the one, if there's two that might happen in the next hour, I'm going to take the one that has the higher profit potential, where I think it's a higher likelihood of occurring, if I can assess that. And I just look at it and I scan them and I watch them and I enter when I believe is the right time. This is a process. And so I recommend that you step back and take a meta perspective on all the stuff that you're doing. How are you scanning the markets? How are you creating your lists? How are things going when you're watching them? One issue I had is that I had too many things on the watch list. I wasn't good at prioritizing. Then I missed setups while I was watching something else. I'm pretty sure that still might occur. I don't know whether I have to fully fix that. But by having a meta perspective, you then can figure out how you want to go about changing it and improving the process. And so it becomes a rather impersonal thing. You're not hunting for a trade so you can make money. Yes, you are indirectly. That is the whole game. But you are looking at how are you executing, how are you thinking, how are you scanning, how are you making decisions, and you're making improvement on that level rather than just thinking about the money. And in my opinion, that is going to yield more results. Also will almost for sure lead to a calmer trading environment within yourself, because you're less thinking about how much money I'm going to make. You're going to be thinking about how well am I executing this right now? Am I sticking to what I said I will stick, or am I not? Am I doing this process correctly? What could be improved about this process? So it becomes a lot more scientific, in quotes, and you become a little bit more level-headed. At least this has been my experience. So enough around processes. I might do an in-depth video around it later on. If you're interested in that, just let me know in the comments below. Because I do believe that there's a bunch of people who talk about process and they don't ever actually share the process. So you have no idea what their process is, and you have nothing to build from. And so I think it is important to actually talk about it. It is not really very exciting, actually. It's pretty boring, but it makes a huge difference. At least it made a very big difference for me psychologically. It made a very big difference in terms of profitability. So here, those are just the stats that I've taken from my Forex account and from me tracking the trades. I write a quick summary. This is the weekly analysis, which is part of the process, by the way. And then I look at the various trades that I've taken. Here's a trade on Brent. You can see it had a nice pump up, 1, 2, 3 peaks. First red day, it still has room to fall for a 50% retracement, though maybe not as far as I wanted it here. It had a various break in structures, which I'm not going to go over right now. It had a peak formation, or not peak formation, a micro M here on the 1-minute chart. I did not take this even though I was on the screen. I should have taken this one as a pretty good entry, actually. I was waiting for a breaking structure on the 1-minute with a pushback later, which I got. So I entered somewhere here as this M was forming here. and then it just didn't go my way. It went against me, so I closed it here at a small loss. I wasn't fully scaled in. It pushed afterwards totally against me, and it wouldn't have worked out. So that was a good decision. Now GJ is probably really one of the best patterns in terms of charts, and now it looks pretty clean in my opinion. You have a nice pump up here. You've got a first red day, meaning that the open price and the closing price is below the opening price. You have a break-in structure, meaning you start to have lower lows. Break-in structure here goes lower, and it pushes up 1, 2, 3. Let me see if I can have a clear picture. 1, 2, 3. This is on the 15-minute chart. 3 pushes up. Then you have a break-in structure on the lower time frame. Here, 1 minute, you have low break-in structure, and then you have a micro M, which is where I start entering with 2 positions. Then it started moving against me. Make this a little bigger. Make sure you see it. So here we go. It starts going against me. It's halfway to my stop loss. So I'm closing the second entry. This was the second entry. This is the first entry. I'm exiting my second entry. I'm exiting half my first position here. And then I am re-entering. So it's starting to, it has a 1, 2, 3 pushes up. It has a micro M here. That's where I should have started entering really, but I was too early, and so I took a small loss. I entered 2 positions here, so I'm now 2.5 positions in. The position sizing was actually a bit small. I should have had a larger position size. But anyways, when you look at the 5-minute, you can see here the 3 pushes, 1, 2, 3. This would have been a cleaner entry, much better than here. That was premature entry on this. That's micro M, and then it goes down. Now this is somewhat of a specific trade or an interesting trade, as it started to find a bottom here, which is around the previous day low. So I was not sure it's going to go further. I already had my entries at break even. So I could have just walked away and let it play out. It was the end of my session. So I did not stick around, and I just closed it. I must have, I missed a screenshot because this is around 9:30. My session ends at 11. But anyways, it probably went a bit lower and then come back, which is where I closed that, but I haven't documented that. But you can see outside of my session, this is my timing window right here. It came up to the line on the 50-minute EMA and just dumped and would have hit my profit target. So I left a lot of money on the table. I was partially psychologically influenced by this because of my early entry. I've sustained some losses, and I had a harder time with it because last month I took a lot of small losses, and so my brain is still a little stuck on that. So I mismanaged this somewhat. It was a beautiful, wonderful setup, very clean. I really liked it. All right, so then I had a silver trade, and this is the last trade, and then we'll wrap it up in terms of review. You have a pump up 1, 2, 3 again. You have peak formation high, peak formation low, or a heartbeat pattern, as Cameron from Pips to Profit calls it. Consolidation. This looked like a potential parabolic channel up, but it was not really moving anywhere. There's no sign it's going to go and take off. So what thesis was, it's coming up, it's 10 a.m. 10 a.m. has a tendency to revert from the previous build-up. So that was the idea, that it's going to revert down to the low of the channel. And that did not happen. 1, 2, 3 pushes up. You have 1, 2, 3 pushes in here. After the second push, this is a micro M. I entered here. It went for a third push up, sold off, and then went to consolidation. So it is respecting this trading range right here. No sign it's going to go lower. I closed at a small loss. And afterwards, it would have pushed up. It was only, let's see if I have it. That's right. It was only in the Asian session. So this is where I was in the Asian session where it had the reversal that I was looking for, which is something that can happen, that you have basically a build up. Asia puts in, goes higher. Europe goes higher, and then you have here a failed breakout, previous day high, and a reversal. It's a good trade. I didn't take this trade anymore after I was done here. Overall, the management was really good in this trade, in my opinion. because I had a somewhat decent entry here on the micro M as this is starting to form going down. It looks like it's going to go, but it's not. And then me giving enough room for it to breathe, not necessarily closing right away. I could have closed half here, but I didn't see that this is necessary because we are having potentially a triple top period here. And then I could get out of break even potentially with it actually taking off. So in my opinion, this was okay. And it was a good decision to close here. So it was overall a good trade. It was a good execution of my process, of my thinking, without actually losing sight of what I'm trying to do. And so this is important to keep in mind when you are doing your reviews. And then I go and actually look at next week and what I want to work on and what I want to improve on as my part of my meta-analysis. But anyways, what are the key takeaways? It is important to stay grounded when you're trading. If you're having a difficult time, what can help, what I have done this week, is I went to ChatGPT. I said, I'm about to enter this trade because of this and this reason. It looks good. I'm in with this much size. And then almost like talk to ChatGPT. When I'm writing it out, it can prompt me to think about things that I should know or I should think about, but I sometimes forget. And it can help you to stay level-headed as you're in the trade. So I found it really beneficial, especially for the first 2 days. Afterwards, I used it a bit less, but it is a useful tool. It is not, ChatGPT doesn't know what you're trading. It doesn't know the chart. And so I'm not outsourcing my decision-making process to ChatGPT. What I am doing is I'm verbalizing, and I guess you can also by talking to yourself do something like that, but I'm speaking to someone who actually responds to me with some form of intelligent response. Sometimes it's not useful, but it will prompt me and give me ideas about how to look at that and be like, okay, am I evaluating this? Am I wanting to get out because it is time to get out? Am I wanting to get out because I'm emotional? What's actually going on? What is the right decision in this moment? Not listening to my emotions, but actually looking at the chart and be like, okay, well, this does require a downsize of my position, maybe peel something off, lock some profits in or whatever. And then just giving it to ChatGPT and he will kind of reflect it back to me. I found that useful and beneficial. I suggest you can try it and see how it goes for you and whether you find it useful as well. I really want to stress, do not underestimate processes. Look at how are you executing. Look at how you're thinking. Look at how you're scanning. Look at how you are doing all the action and see if you can find a little improvement. You don't have to change the whole process or get the whole process perfect. You're just looking to make it a little bit more efficient. And you can do so either every day or every week, or whenever it's time for you to review things, and just tweak it a little bit. Doing this really has greatly helped me because I'm now putting all my attention where I have control. I have no control over how much money I make. I have no control over the market. What I do have control over is the processes I am applying to make money. And it very much looks to me like that the more those processes are dialed in towards me, my life situations, how my brain works, the trading style I'm using, the more it is dialed into that, the more likely it is that I'm going to be profitable in the long run and that I can size up and make significantly more amounts of money. But they're all small, intricate parts of a process. You can even look at things, and I actually suggest you look at things like, how am I sleeping? How am I eating? Am I getting enough exercise? Because all of these factors have a direct impact on your brain, have a direct impact on your executive function of your brain, have a direct impact on how you're scanning the markets and your emotional well-being, which all are part of trading. So it is not just looking at the markets and how you're scanning the markets and how you're recognizing patterns and then going back and replaying it and looking at it, being like, oh, okay, I missed this push, or it looked like this, but it didn't turn out this way. Replaying it over and over again, getting into your muscle memory, actually getting a deep feel for it. That's all part of the process. But your relationships, your sleep, your eating, all of your habits, they're also part of the trading process. How are you setting up your workstation? How are you standing? Are you sitting? These are things you can actually try out. Maybe you're doing better if you're standing up while trading. Have a standing desk, right? So there's so many parts to it that I recommend to look at and dissecting it and treating it like a system. And then each part of the system you can improve and make it a little bit better, and you will see the results. For me, it is a massive difference. There's multiple things that play into this. One, I did some deep inner work on myself that was useful. So I'm more centered in myself because of that inner work. There was some conflict I didn't realize was going on within me. It's not a topic for another video. But then also seeing how I'm recognizing the setups, recognizing those processes and the systems, and just treating them like that and improving them has made such a big difference in my trading. And I really hope it's going to make a big difference for you as well. Now, your trading style is unique to you. Maybe you're also trading Stacy Burke, maybe you're trading something else, but whatever it is, look at it through a process lens function. It will really make a lot of difference. Anyways, if this video was useful, then please leave a like and hit the subscribe button, share with someone else that you believe it might be useful. Head over to the Telegram channel if you want to see what I'm up to, where I'm sharing either some trades that I've taken or setups that I'm looking at. And I wish you a beautiful day. Take care. Bye-bye.